And good morning, everyone. It's a real privilege to be presenting today on Artemis Gold, and I view it as a very exciting and transformational time. And for those that may not have seen, we did announce the next step in that transformational journey this morning. And I will get into that, but before I begin, I would like to remind everyone that certain statements I will be making will be forward-looking, and I encourage you to refer to our public filings and disclosures, including the press release from this morning, for a more detailed discussion of risks and uncertainties related to these statements. So why Artemis Gold? First of all, we own the Blackwater mine. Blackwater is a Tier 1 asset in a Tier 1 jurisdiction. We have 8 million ounces of gold in reserve, and we are in production and at a very low all-in sustaining cost. And we're also generating strong cash flow. We have strong shareholder alignment with the board and management owning approximately 39% of the company. And I do want to highlight the building of Blackwater in an industry-leading 22 months, and I view that as an exceptional accomplishment for our sector. With the build and startup led by our president, Jeremy Langford, who's here in the room today, our team has a track record of delivering against our commitments on a timely basis and in line with guidance. In an industry that's often challenged with risks and uncertainties, we're pretty proud of this achievement. But we're just getting started, and we have ambitious plans to grow Blackwater to be a plus 500,000 ounce per year producer, and that's in the near term. And we did announce, as I said, the next step along that path this morning, and that's with a capital efficient upgrade to the current operation, increasing from 6 million tons of throughput per annum up to 8 million tons. That's a 33% increase. We do have a very capable and experienced management team and board with a proven track record of success. I just recently took on the CEO role just over 2 months ago. Stephen Dean has now moved to be the executive chair, and Jeremy Langford, our president, will continue leading our growth and optimization strategies. And that does include execution of our projects, namely Phase 1A and what we hope to sanction very soon, Phase 2. Blackwater checks all the characteristics of a true Tier 1 asset. We've got scale, we've got resource upside, we've got large underexplored regional land package, we've got great infrastructure, we have community support, and also a low carbon footprint through our connection to the BC hydroelectric grid. In May, we officially opened Blackwater. We did have the Premier attend that event, as well as the Minister of Mining and Critical Minerals for the province, and other senior representatives of our communities and First Nation partners. But I just want to highlight some of the things that the Minister of Mines pointed out, and he pointed to Blackwater as a great example of what the province wants to see more of in BC, a project that creates good jobs, has good local and Indigenous community support, and we take crucial steps to minimize the impact to our environment. And I really do think this shows how responsible mining can move our economy forward in the right way. 2025 is already a transformative year, and again, like I said, we're just getting started. We did start the year finishing construction of the current operation. We poured our first bar of gold and silver at the end of January. 3 months later, declared commercial production, and within a month after that, exceeding design capacity. For next steps, we did announce our Phase 1A upgrade that we're already starting to execute. We're in the ground on earthworks, and we should be pouring concrete on Phase 1A very shortly. and that will be in production by the fourth quarter of next year. So this is a near-term upgrade of 33% to our capacity. And then we are on track to finalize an optimized and accelerated phase 2 expansion. That's coming in the coming months, and we do plan to put that to the board for a sanction decision before the end of this year. So it truly is an exciting time at Artemis. The current phase 1 build is operating very well. We did have very strong performance for what we reported on post-commercial production for our Q2 results, with more than 35,000 ounces produced in the months of May and June. As I said, we exceeded design capacity, 102% of design in the month of June, and we're continuing to drive that forward. At today's gold price of over US $3,600 an ounce and our all-in sustaining cost of $800 an ounce, we've got a tremendous margin, and I think that's roughly about $1,000 higher than the average of our peer group. These strong cash flows, in conjunction with a $700 million revolver credit facility that we announced recently, and we're targeting to close that at the end of this month in September, really does give the company the ability to both refinance our project loan facility as well as provide the financial flexibility to deliver on our near-term expansion opportunities. And there should be about $450 million of that project loan facility left at the end of this month, and that's what will be refinanced with that RCF. The current we did reiterate our 2025 full-year production guidance recently of 190 to 230,000 ounces of gold. We did also reiterate our post-commercial production all-in sustaining cost range of $670 to $770 per ounce, and that's on a US dollar basis per ounce sold, and that does put us in the lowest decile amongst gold producers globally. We do have a few strategic advantages that enable us to produce at this cost level. For one, very low strip ratio. We're currently in the range of 0.5 to 1. Life of mine, it's about 2 to 1, and that compares to a lot of other mines that are double or more than that. For our deposit, it's also the geometry. It's located above our plant, above our tailings facility. It's all a downhill haul, and that does save on both truck maintenance as well as, importantly, fuel costs. And we are connected to the BC grid, and cheap hydroelectric renewable power is a big catalyst for driving our costs lower as well. When we look at our growth and next steps, it really is an organic growth strategy, and there's 4 prongs to that strategy. First and foremost, it's continuing to deliver on our operational performance. We are driving to 10% above design capacity before the end of this year. We're on track to do that, and things are going well at the mine. The second leg of that organic growth is what we announced this morning, and that is the Phase 1A expansion, a 33% expansion to our mill throughput. We're really not bottlenecked by the mine. It is a processing bottleneck today, so that's the reason for the Phase 1A, and that will enable us to continue to optimize into 2026. And that project will be up and fully commissioned and running by the Q4 2026, as I mentioned. Third, we're in the final stages of the front-end engineering and design on an expanded and accelerated Phase 2 expansion. So we are looking at something larger than what we previously put out. It's too soon to say what that will be, but we're over the next 2 to 3 months, we'll have that finalized, and put that to our board for a sanction decision. Phase 2 will be transformational, not like Phase 1A, which is a step change. And we are driving to be a plus 500,000 ounce per year producer, as I mentioned. And then last but not least, we are going to get into regional exploration. We have a tremendous land package. Nobody's done drilling on this package since 2014. And we have drill targets established, and we're ready to go on that very soon. I'm going to take a little bit of a deeper dive, if I can get this thing to advance, into what we announced this morning, which is the Phase 1A expansion, upgrade and expansion. Key aspects is additional grinding capacity with a new vertical mill that will be installed as a primary mill to achieve additional capacity. We're also adding some additional tankage and upgrades to some of our other the wet side of the plant, things like additional tankage on our CIL train, and making upgrades to our oxygen supply and reagent systems and carbon stripping systems. Some of these systems will be commissioned ahead of the grinding, ahead of the vertical mill, and that will help support ongoing optimization as we progress into 2026 as well. The mine and the existing crushing circuit, so the dry side of the plant, we feel is capable of supporting that 8 million ton per annum rate. We may need to add a couple of trucks and a little bit of support equipment for the mine, but in general, we're there. It really is just the wet side that we're adding to on tankage and grinding. For scope of work, you can see the main elements on this slide. The additional tankage will help to first increase residence time and maintain residence time as we drive that additional throughput going forward. And I don't think I'll say much more about that, but we're well advanced. The earthworks have already started. We've got a concrete batch plant being commissioned on site and should be pouring concrete within the next couple of weeks. In addition to that, and in anticipation of a Phase 2 sanction decision, we took the opportunity to order a new 18 megawatt SAG mill and an 18 megawatt ball mill. The ball mill is already fabricated. It was a cancellation from a previous customer. And the SAG mill is one that's a copy of a mill that's in operation elsewhere. So the engineering should be very fast for us on that. This just tremendously de-risks our Phase 2 expansion and really helps to, together with Phase 1, with the additional production and cash flow and the ordering of these mills, we're set up very well both to fund and to execute on our Phase 2 project. It's too early to say exactly what the throughput rate will be on Phase 2. We're currently finishing, as I said, that front-end engineering and design, but we're getting close on that front and plan to put that out there over the next 2 to 3 months. Before I talk about exploration, I just want to highlight that our current reserve, which is 97% in the proven category, was done at a $1,400 gold price. When we look at a $2,000 pit shell on our resource, that does add about 165 million tons and 3.2 million ounces. So there's lots of upside to this deposit. We haven't done any recent drilling on the deposit itself. We've got a large reserve, but there is a lot of upside. It is open at depth, down plunge, and at depth to the south. So we are not focused right now on adding to the resource of the mine. We are really going to drive into exploration in our region. We have a land package that is approaching 1,500 square kilometers. As I said, over 30 targets identified to date. Our biggest issue will be to how to prioritize that. We do plan to announce a nominal program starting up this year, and what I believe will be a 5 to 10 year long-term strategy to explore the full potential of our land package. And again, I think I'm tremendously excited about this fourth leg of organic growth as we firm this up. Just turning to our capital structure, we have about 230 million shares outstanding, a current market cap of about 7.5 billion Canadian. As I mentioned earlier, 39% of our company is owned by the board and management, so very strong alignment with shareholders. We do have a very supportive shareholder registry, many who have been involved with the company from its inception, and even previous to that with Stephen Dean, our executive chair's predecessor companies. So good, strong support on that front for our growth going forward. And then just to start to wrap up, on a valuation basis, and considering our low-cost production and growth profile, we do still think we have lots of significant room to grow on a PNAV basis. We believe that we're undervalued. I think every company does, but as shown here, others do as well. We think we're trading at a discount to our peers, and through strong operational performance and execution of our near-term growth strategy and plans, and optimizing those plans, we think we can surface more NAV as well. So in conclusion, we are establishing a track record of disciplined growth and delivering one of the lowest all-in sustaining costs in the industry. We've got a tremendously strong balance sheet with a growing cash balance. And Phase 1A, which was just announced this morning, will provide additional production and cash flow to fund our transformational Phase 2 expansion, which we do aim to sanction before the end of this year. And with that, I'll turn it over for questions.
I think we have time for one question. Does anybody in the audience have something they'd like to ask Dale? If not, Dale, I mean, maybe one question that we've gotten before is just timeline to 500,000 ounces, assuming you sanction at year end.
Yeah, we're with these mills and the cash flow provided from Phase 1A in our current operation, we think we're financed to drive that growth aggressively. If we sanction this in Q4 2025, which we're planning to do, I would say a nominal 2-year build. We're still finishing the front-end engineering and design. So, we can't put out a definitive production or execution schedule on Phase 2 yet, but yeah, stay tuned. We're 2 to 3 months away from announcing that.
Okay, fantastic. Thanks very much.
Thank you.